Bitcoin has undoubtedly seen an incredible rally over the last couple of days, with the price pushing into the $19,000 range, breaking out of its downtrending resistance of the falling wedge structure, smashing the weekly RSI, and of course, flipping the 50 EMA. However, one major obstacle remains in Bitcoin's way. We're going to go ahead and discuss that today. Let's dive in. Okay guys, welcome back to the channel. Thank you for tuning into today's video. We're going to go ahead and take a look at Bitcoin today, talking about the larger time frame, the short-term time frame, CPI, and the traditional markets. We're most importantly going to be discussing the final barrier in place preventing Bitcoin from confirming the macro reversal and what exactly that is and how we can overcome it. Before we get into it, smash the like button, hit the comment button, subscribe to the channel. We do daily technical analysis, structural analysis for Bitcoin and the traditional markets. And of course, if you're interested, you can join our Telegram channel, which is a second link down below. We've got access to all of our updates, charts, analysis, news events, videos, and a whole range of more information. If you're interested in joining our VIP channel, you get updates on exclusive altcoins, you get daily trading signals with entries, targets, stop losses, everything is laid out for you. And of course, our exclusive group chat with only our VIP members. Let's go ahead and dive in with the market data. So January is looking very great. We saw up 13.46% currently, a really great month, really nice to see after a couple of red months in a row. Of course, 24-hour volume is up around 40%, pushing over 100 billion, and we are seeing liquidations come down about 16% to around 205 million. Volatility for the 30-day period is up around 0.3% to 1.61. Still quite low for volatility, but we can expect that to rise over the next couple of days as the volatility that we have seen in the recent few days start to price into the 30-day period. Moving on, of course, like we said, the majority of liquidations are down 16%, but as we can see in the chart over here, the majority of these liquidations have occurred within that 12 to 24 hour region, and within the last 1 to 12 hours, we have seen not a lot of liquidations go on as the price has been stable at this $18,800 range, as you can go ahead and see on the charts. So let's go ahead and talk about the broader markets, and then we'll jump into Bitcoin. We'll talk about the short-term price action, jump into the macro analysis, discuss the validations and reversals, and then wrap it all up. So what we're seeing on the DXY here is of course quite an aggressive breakdown. We've been talking about the DXY for quite a fairly long time now, saying that the next bearish target is 101.3, and it looks like we've made some decent headway, about halfway, a little bit over halfway to 101.3 ever since 103.8 breakdown. Again, with the CPI results coming out very bullish to the markets, we have seen the DXY drop. Now, we didn't see an initial bullish reaction from CPI as a lot of that rally was priced in. As we said in yesterday's video, if we see forecast to consensus or consensus to forecast on those numbers or between those numbers, the market is going to see an initial bearish reaction and then should stabilize and choose its direction, which is exactly what we saw. So we did see the DXY fall as the numbers of CPI overall was bullish. We did see a drop in CPI. We did see CPI come out at 6.5 for year-on-year at consensus, and thus the DXY dropped and the markets did rally. Looking at the Dow Jones, we have seen a smaller rally on the Dow Jones, pushing up to around 34,400, currently printing a red daily candle. Two things we want to note over here. Number one, we broke out of our dotted line, therefore breaking out of this short-term downtrend. This short-term downtrend, which we are in, is now over. We are now in a short-term uptrend. Okay, our short-term uptrend is currently active. Now, for the short-term to metastasize into anything important, we do need to see a break over 35,000. A break over 35,000 will end up resulting in a continuation to retest the all-time high over here, which will be incredibly bullish and can result in the next leg up for the markets. Until then, we are still very much in this cautious zone between major resistance, between major support, but we do have to be open to the potential for a rejection back down. So I wouldn't be too confident right now on the Dow Jones. I'd be still a little bit more cautious. The story is more or less the same for the S&P 500. We did see a decent rally over the last couple of days, again breaking out of this downtrending structure we had as we broke out of our uptrending structure, which is our rising wedge over here, then into a descending channel, of course breaking out of that, retesting the macro bear market resistance. So currently what we are seeing, Dow Jones under major horizontal resistance, S&P 500 retesting and potentially rejecting from our our bear market resistance. So the buyer sort of markets right now is very much we're at resistance, okay? And we can apply that to Bitcoin, because Bitcoin, although currently looks really good, is underneath the strongest point of resistance in the history of Bitcoin's chart, which is that POC level on the weekly VRPV, which we'll show you in just a moment. So we do have a degree or an element of potential bearishness developing the charts over here as we have extended quite high. We're extending into resistance. Yes, we've confirmed a lot of really bullish things. 50 EMA break on the 2-day chart. Weekly RSI break, very bullish. Break out of the descending diagonal resistance of the falling wedge, incredibly bullish. The charts are looking great. Like we've been saying for the last couple of weeks, bearish momentum's dying. The uptrend is coming. The reversal is developing. This is all correct. But we do have to be objective in our analysis and say, until we meet all 4 points of our validation, we can't be 100% confirmed that this reversal will develop. So we do have that element of bearishness still present on the chart that we do need to squish for us to be more confident in this uptrend. So let's go ahead and talk about our bond yields really quickly, and then we'll get into it. So 10-year government bonds, again, these are quite leading, quite good indications what the market's going to do. We can see we are at support. The 10 years are at support, and the 3-day reaching the 50 EMA. A breakdown from here will result in that continuation down to 2.7. Very, very bearish for the DXY, incredibly bullish for the markets. So again, this drops down here, very bullish for the markets. We do see some degree of a bounce over here, very bearish for the markets. So keeping an eye on that. Same goes for the 2 years over here. The next target being that 4%. Of course, if we cannot break upwards from this structure we are developing, maybe some sort of falling wedge structure, we could see a rally back upwards. Again, breaking over this local high will be required to see a continuation. Otherwise, we're looking for a lower target of 4% and potentially even lower. Again, bullish for the markets. So let's talk about the short-term price action for Bitcoin and then get into the macro. Now, there really isn't too much to discuss in the short term, guys. We very much did see kind of what we were expecting. We saw a rally from these lower zones. We said we have this downward trending resistance over here. We've been talking about it for quite some time now. We said if we break from that downward trending resistance, we have a few targets, and those targets are represented by these gray boxes, the next zones. We met target number 1, we met target number 2, and we met target number 3. We have actually now seen a break above this downward trending resistance, and this is more macro. So we're going to dive into the more macro now. This is very important. We'll come back to the short term in a second. We're looking for an honest, reliable, and accurate exchange that you can trust to trade on. Go ahead and sign up to Bitget with the link down below and join myself and all of our other VIP members and other members who trade on Bitget daily. There's a whole range of benefits and features you can actually get by trading on Bitget. These include no government regulations, meaning you can sign up from anywhere in the world. There's no KYC, 0% trading fees on spot, massively reduced trading fees on futures. It's one of the lowest in the game. And most importantly, access to their protection fund in case the exchange gets hacked. You can actually get reimbursed for your funds, so you can ensure your funds are safe. Now, most importantly, if you do sign up with the link down below, that first link, you'll get access to 2 additional features. These include access to a reward center where you can get up to $4,163 in rewards, and access to the MegaWhale exclusive referral link, bonus discounts. Every other month we do bonus campaigns. We get up to 10% off your trading fees, or even you get a percentage of your trading fees refunded to your account as USDT. Essentially, you get paid to be on the exchange. That's enough, guys. We'll get back into the video. Broken through the macro resistance. What does this actually mean? So, from a structural standpoint, this of course is very, very bullish. We have of course broken above our falling wedge structure. Now, as we know already, a falling wedge structure is a bullish reversal pattern. The measured move from a falling wedge is taken from the first retest of the high to the second or first retest of the low. Apply that to the breakout point. That takes us up to $28,000. Now, here is the thing about $28,000, and we'll get back to it in a second. $28,000 is the yearly low of the bull market in 2021. Now, this probably doesn't mean much to you if you're new to the channel, but if you watched yesterday's video, you will know that the yearly low for prior bull markets, represented by this red line here, and this is at 28K level over here, have been key points in breaking above to confirm their entrance into a new bull market. We'll come back to it later on. So, as per the measured move, it suggests a potential move up to 28k is likely upon a breakout of its structure. Now, we do know how measured moves work. They suggest the direction, not where in which the price will stop. Generally, upon breakouts of measured moves, we continue until we meet the next major area of resistance. According to structures, the next major area of resistance is the zone between 22,600 and 23,800, of course, represented by that December 2020 crunch zone. So, the uptrend from here could develop into this level over here, where we're either going to see a rejection back down or a trigger and continuation into this 28 to 30k zone. Breaking above 30k, we start a new bull market. Breaking above 23.8, we facilitate a continuation of the reversal. Of course, the reversal break has occurred. So we are in a reversal now. The reversal has occurred, but it has not been confirmed. Now, this is the reason why it hasn't been confirmed. If we take a look at our VRPV, which I've been talking about for the last couple of days, we still have yet one major point of confirmation that we need. And that is, of course, the break above this key level over here, which is represented by this red line, which is the $19,238 for resistance. This is the VRPV on the larger time frame. This is in fact the strongest point of resistance Bitcoin has ever seen. As you can see in the chart over here, we have actually pushed into that range and have been rejected, and therefore, like I said, while the S&P 500 is at major resistance, the Dow Jones is at resistance, Bitcoin is at resistance. Now is not the time to be looking for late entries. Now is the time to watch what happens here to see if this reversal will actually be validated and we're actually going to see a continuation, or if this rally upwards through this level is going to be a bull trap and a continuation back into this channel towards the $16,000 range, okay? So, just to reiterate, the points of validation for a reversal are as followed. Number one, a break daily above our structure. Okay, we have a break above our falling wedge structure. That is point number one. Good. Point number two, we need a 2-day break and close above our 50 EMA. Okay, our 50 EMA is this red line over here. We've got that. So 2 points of validation. Third point of validation, we need a weekly break above our RSI again on the weekly chart. We can show you it over here. And again, this is something we've been tracking for a long time, and we had that. So we've got the momentum, we've got the shifting trend, and we have the break of the structure. All we need now is the break of the resistance zone. So I'm gonna say it again. We have the break on momentum, RSI. We have the shift in trend strength, 50 EMA. We have the structural resistance break. We have that downward diagonal resistance of a falling wedge break. All we need now is our fourth point of validation, which is our zones, our volume ranges. We need to break over that horizontal resistance represented by the largest chunk of historical trading resistance on the Bitcoin chart, sitting at 19,238. If we are able to break above that, it will confirm the breakout of this falling wedge is validated. It will confirm that this is unlikely to be a bull trap. It will confirm a swing upwards into 22,000. It will confirm the best point of entry for the least risk on Bitcoin for the larger time frame. That is what we're looking for. That is what we're waiting for, guys. So keep that in mind. Let's go ahead and take a look at the 4-year cycle again really quickly and talk about that measured move target to 28,000. Why is 28,000 so important? So looking at prior cycles, look at the yearly lows of the prior cycles. This point here. Draw a horizontal line, see what happened. We lost that point, obviously bear market depths. Okay, that was when we entered the bear market lows. Once we broke a monthly candle above that point, we never closed a monthly candle back below it until we lost that level again on the prior cycle. And we can say the same thing again. Over here, breaking above this point here will result in a continuation on the monthly upwards. We will never close a monthly candle back below it as we did over here. We didn't close a monthly candle, we wicked down, and it will continue into an uptrend. So the measured move from the structure takes us up to 28K, which is going to be a make or break point for the bull market. Looking back over here, when does the bull market actually start? According to a 4-year cycle, we are looking for a break over the Ichimoku cloud baseline, which is this red line over here. A break over the baseline, you can see it occurs over here on a monthly chart. occurs over a monthly chart, that is when the bull market starts, and the bull market continues until we lose that monthly chart again on that baseline until we enter a downtrend. The downtrend generally lasts for 12 to 13 months. We generally enter 17 months of uptrend until we break over that conversion, that baseline again, before we enter 18 to 19 months of uptrend. So according to a 4-year cycle, the next bull market should start around April 2024 and it should end around October 2025. Guys, I'm gonna go ahead and summarize one more thing before we end the video, and that is of course the bearish scenario. What is the possibility for us to invalidate all of this? What is the possibility for this reversal to be invalidated? What would happen if we do invalidate this reversal? Say for example, we do not break above this POC level. Say for example, the S&P 500 gets heavily rejected from this level over here, which we're pointing at, okay, this resistance level. Say for example, the Dow Jones goes down. Say for example, the DXY bounces strong. What would happen to Bitcoin? Where could Bitcoin go? So again, all of these points of validation, they don't deny the bearish possibility. What they do is they add a statistical advantage to the likelihood of the bullish scenario playing out, because there's always a bearish scenario, there's always a bullish scenario, there's always possibilities, there's never 100% certainty. All we do as a trader, we look for validations, we look for probable, we look for causes on the chart or scenarios on which we could apply significance to, and the more of those validation points we have, the greater the probability of the price moving in a certain direction as opposed to the other. So what we're seeing now, like we said, we're seeing a structural, we've seen a trend-based, and we've seen a momentum-based validation for our uptrend. Now we are waiting for that last, which is that resistance, horizontal resistance, a break of the resistance zone to confirm 4 points of validation. With 4 points of validation, we have a greater probability of a continuation upwards than we do downwards, okay? Now, let's say we don't get that final breakout, which is that POC level. This is the most important one, by the way, okay? The most important one, as this POC level is the strongest point of resistance on a chart. What could happen to Bitcoin? We're looking for a breakdown back to our POC level, retesting this range, and the levels we were talking about prior to this rally all become valid once more, okay? So moving back to this level here, all these levels over here become once more relevant and valid. We'll be looking for a move back into these ranges, of course, looking for a retest of 17,400, 17,200, moving back down to 17,800, and of course, retesting all these levels. Breaking below 15,500 will result in a move towards the bottom half of this falling wedge, once more potentially retesting 14,000, 13,000 before we bottom out, okay? I think it's very unlikely we see that. With CPI falling, with stocks obviously rising, with Bitcoin breaking from some major structural levels over here, I think it's very unlikely we do see a continuation downwards. Again, a lot of the technicals are very bullish here. It's been bullish for quite some time. We've been pointing it out for quite some time. I think it's much more likely we do see a continuation towards the upside. Anyway, guys, I'm gonna leave the video there. If you got any questions, leave them down below, and we'll see you guys tomorrow. Cheers.